On this episode of The Lawyer You Know, we're going to continue down the process of buying a house like a lawyer. We've already gone through how to pick a realtor and how to pick a house like a lawyer. Now we're going to go through the final steps before closing day. Once you agree on a purchase price of a house and you sign those initial documents, there are still a ton of steps you need to go through before getting to that final closing day and getting the keys to your brand new house. The first step we're going to talk about is picking homeowners insurance. Now, there are a lot of different aspects of homeowners insurance that are important, but we're going to focus on three. First, how much coverage do you need? There are two schools of thought on this. You can either get coverage up to the purchase price of the house. Let's say you bought a house for $250,000, so you get coverage up to $250,000. But sometimes if you get a crazy good deal because you followed all of our steps through all of our videos, you may want to get the replacement cost of the house as your insurance. Let's say the house is actually worth $300,000, but you only paid $250,000. If that house were to burn down or get messed up in a flood and you need to build it from the ground up, $250,000 may not be enough. You may want to go with the replacement cost of $300,000. So those are the two schools of thought, either purchase price or replacement costs. The second step is figuring out what the homeowner's insurance is actually going to cover. And there are some necessities that you have to have in your homeowner's insurance. First, it's got to cover the structure, the house itself. Anything damaged to the structure of the house, the roof, the flooring, the walls, whatever it may be. If there's a flood, if there's a hurricane, whatever may be, a fire, you need to make sure that's covered, the actual structure. Everybody knows that. But you also need to make sure any detached structures are covered. That can be a shed, a detached garage, a mailbox, any other structures on your property that may get damaged. You need to make sure you have that coverage in your homeowner's insurance policy. Third, the contents or personal property inside. Burglary, fire, flood, damages some of your property, somebody steals your jewelry, you need to make sure that's all insured under your homeowner's insurance. And fourth, near and dear to my heart, is your liability coverage. That means anybody gets injured at your house. A kid falls down, jumping into the pool, cracks his head. A kid is riding his bike down your driveway, slips off, breaks their leg. You need to make sure you're covered for liability insurance to cover those injuries and those medical bills. And sometimes there's med pay, which covers those medical bills in a situation like that where someone gets hurt at your house. Someone's doing something dumb, they're up on the roof, they fall down, break their leg. You don't want them to sue you personally, so they can get the money from your insurance company. That's why you have insurance. So make sure that is part of your homeowner's insurance. And once you know how much coverage you need and what types of coverage you need, you come to the third and all important part of every process, which is price. So you're going to go to a homeowner's insurance agency or an insurance agency where they can get you a ton of different quotes. You can ask for reputable agencies from your realtor or friends and family, but once you figure out who your homeowner's insurance agent is going to be, they can figure out the policy differences for you. And what you want to ask them is to give you 3 different quotes from reputable companies. And as we always want to do on this channel, we compare apples to apples, not apples to oranges, and we know how much coverage we need and what coverage we're looking for, so we can tell our agent we want up to $250,000 worth of coverage, and we want these 4 coverages absolutely in our homeowner's insurance policy. You ask the agent to find the reputable companies because you don't want to end up with a company that goes bankrupt or disappears or isn't going to be able to cover your claim if you need to make one in the future. Because the worst thing that would happen is your house burns down, you have this insurance, but the company doesn't have enough money to pay out the insurance claim, and now you're left sitting there without a house and you've been paying these premiums all these years. What you want to do is once they give you the 3 quotes, you pick the best price for you and you move forward with that, and now you know your home is protected. Next step, inspection. This is going to be one of the parts of the process where price is not of the utmost importance, and a lot of times you get what you pay for. So be willing to pay a little bit more for the inspection process because it can save you so much money in the future, so much heartache, so much misery going forward if you go into a purchase eyes wide open. Now, you can expect an inspector to find certain things that are wrong with your house, especially if you got a great deal for it, especially if it was on the market for 365 days, you can expect problems. What you want to do is you want to get 3 or 4 different options and talk to those inspectors and talk to them about their process and what they do as part of the inspection. You can get these names from friends and family who have used these inspectors in the past because it's really important. They know which ones are thorough and which ones aren't when we're selling a house or buying a house, because we've sold houses before and we've looked at the inspection report and we're like, wow, this guy was very, very, very in-depth and he went through with a fine-tooth comb. And that's what you want. You can also ask your realtor, obviously, because they deal with inspections all the time. That's their business. So they'll know who the best inspectors are. And sometimes, like my realtor will say, here's a guy that's pretty cheap, but if you want the best, he's going to be more expensive, but here he is. And we always pick the best and most expensive inspector that's going to do a great job for us. because what we want to do throughout this inspection process is meet with the inspectors and tell them what our goals are. Sometimes we have goals of putting all the problems, all the issues, all the repairs that are going to be needed to be done in an inspection report and give it to the seller. Because now the seller is on notice of these defects, and if there are code violations with the electric or the plumbing, or there's termites or things like that, the seller almost always has to pay for those. So that's going to be something that's money not out of our pocket. It can either come off the purchase price, or the seller can just pay it out of pocket and we still have the same purchase price, but those are problems we don't have to deal with as the buyers. That's always going to be a priority with the inspection. Other times, when I purchased a foreclosure, for example, I didn't care what was wrong with the house. The price was so good. I knew I was going to go in, pay to fix whatever needed to be fixed, and I was going to have so much equity in the house that I was going to be flying high no matter what the problems were, but I still wanted to go in eyes wide open. I still wanted to know if there was anything wrong with the roof, the air conditioners, the pool pump, whatever it may be. I wanted to know what the big issues were, the big ticket items were going to be in the house, and I walked through it with the inspector, and most of them will let you do that. So you always want to ask, whenever you've done your inspection, the last hour, I want to come through and walk it with you so you can actually show me these problems and I can put my eyes on it so you can have an idea of what you need to fix. A lot of the inspectors are really great at this and they'll be happy to do it. You need to make sure that you get an inspector that puts together a detailed report, a thick report, so you can give it to that seller, because they know now that they're on notice and they have that report, even if your deal falls through, they're going to have to disclose these issues to any future buyers in the seller's disclosures form, because now they're on notice. Before, they may have said, I didn't know there was anything wrong with the air conditioning. I didn't know there was anything wrong with the pipes. Well, now you know because my inspectors found it and put you on notice. And that's another thing that's going to give you leverage throughout this process and could affect the price of the contract of the house. If there are any major issues, like you didn't know the roof was bad, but it is, and you have to spend 20 grand fixing the roof, well, I'm going to either need $20,000 off this purchase price, or maybe we can split it, or whatever it may be, so that great deal that you got gets even better. Next part of the process is the appraisal. Now, the appraisal to me is one of the easiest parts of the process, because if you get a good deal on a house, you never have to worry about it appraising for the amount of money you paid for it. I fully rely on my realtor in this situation. I ask them for the best appraiser. They pick it. They deal with the banks and mortgage companies and other realtor and seller, and they just put it all together and make sure this house appraises for the value that we need it to. And everybody's usually on the same page and the same side, wanting the same thing when you get your appraisal. You want it to appraise for at least the purchase price. I've never had an issue with this, because if you get a good deal, it's always going to appraise for that price or even more. Now, if it doesn't, and you paid too much for a house and it doesn't even appraise for what you paid for it, you can go back to the seller, try to work something out, but that's going to be up to you and the seller if you're going to fork out some money cash or not be able to get it insured up to the amount you paid for it, and it creates all sorts of problems. So if your house doesn't appraise, that's a whole other video. But most of the time, the appraisal process is smooth and the house appraises for what you pay for it. The next step in this process is mortgages. And there's tons of different kinds of mortgages you can get. Talk to some different mortgage companies about the process and services they provide. Wherever you bank, whether it's Chase or Bank of America, they probably provide these services. Or if you want to go to Rocket Mortgage or AmeriFirst or something like that that specializes in mortgage, they'll have all this information for you. But usually it's either a fixed rate mortgage where you lock in an interest rate and you're going to pay that same amount for 30 years and own your house at the end of those 30 years with the same interest rate the entire time. Or you can do an adjustable rate, which is a riskier one, which you can usually get a better interest rate, but at the end of 10 or 15 years, it's known as an ARM. A 10 or 15-year ARM, that interest rate could skyrocket and can be volatile with the market, and then you could end up paying a ton more money. So if you're only going to be in your house for 3 to 5 years, sometimes an ARM is better for you. If this is your forever home and you want to pay it off in 30 years, usually a fixed rate. Now, there are jumbo mortgages or interest-only mortgages or other different things you can do in determining how much money you actually want to put down, how much cash you can put down, 20 or 30% of that purchase price, or is it only going to be 5 or 10%? Because what's going to come with that is some mortgage insurance and some other fees that you're going to have to pay, but you can keep the cash in your pocket to do the repairs and do the upgrades to the house that you want to do because you got such a great deal on a house that needed a lot of work. So the important part of a mortgage is how much you're going to put down, what interest rate you can lock in, and how long you're going to have that interest rate fixed for. So talk to professionals about what mortgage would be best for you. But let's talk about these. Let's just recap these final steps real quick. So once you agree on a purchase price of a house and you sign the dotted line, before you get to closing day, you need to make sure you have homeowners insurance lined up. You need to make sure you've done the inspection and the appraisal and know what your mortgage is going to be, because you're going into this purchase, you're going into these closing days where you're going to get your keys with eyes wide open. You know what that monthly payment is going to include. One final tip that I'll just give, and this isn't financial advice, this isn't legal advice, this is just what I do. They're always going to ask you, do you want to escrow your homeowner's insurance and your property taxes? Now, I used to do this with my first house until my homeowner's insurance lapsed because wires got crossed with flood insurance and homeowner's insurance, and I was left without homeowner's insurance for a day until I called the company, wrote the check myself as a personal check, and paid it for the year. And to make sure that never happened again, I called the bank and said, I want all that money out of escrow, send it to me. I'm gonna pay my property taxes and my homeowner's insurance myself once a year. And there's been a ton of benefit to that. Number one, I never have to worry about my homeowner's insurance lapsing again because I'm making sure I make the payment. And number two, the bank's not holding my money in escrow. I get to have it. I get to invest it if I want to. I get to spend it on other stuff. And I just have to pay it once a year. I have to make sure I have the money and budget for it and have my property taxes and homeowner's insurance to cut that check once a year directly to those companies. Because when I pulled it out of escrow, and let's say there was $5,000 a year I had to pay in insurance and taxes, they were holding $15,000 in escrow to cover themselves to make sure if I stopped making my monthly payments, they would have enough money to pay my property taxes and my homeowner's insurance if they had to foreclose and take the house from me. So they were holding extra money, which I wasn't getting any percentage on, any interest on, any investment. It wasn't in my investment portfolio because they were holding it. So you want to make sure you have that money yourself and just cut the checks yourself. But that's something you have to budget for. That's something you have to make sure you have enough money to actually put it out and spend it every year because it's a big chunk of money. Your property taxes and your homeowner's insurance paid once a year is a big chunk of money. So make sure you properly budget for that. I just like to do it because I'm a control freak and I think it works out better. I'd rather hold my own money than have somebody else hold it for me. These 4 steps, homeowner's insurance, inspection, appraisal, and mortgages, are very important steps to get you to that closing day. Our final video will be how to handle closing day like a lawyer, so stay tuned, subscribe, and like these videos so you'll get alerted when the next one comes out.